12 lakh crore rupees evaporated from the Indian stock market today. That's more than 120 billion US dollars, all of it gone in just one day's trade. And it's thanks to the war in West Asia. Today was one of the worst trading sessions of the decade. The Sensex crashed. It lost over 2,400 points. That's a fall of over 3%. The Nifty fell by more than 700 points. Again, that's a loss of more than 3%. And these are not small fluctuations. This is a collapse. The damage will be felt by every sector, mutual funds, pension holdings, even specific stocks. But why did this happen? Why did the market crash? Well, there are three reasons for this, and they're all connected. The first one is oil. The latest wave of attacks have shaken the global energy markets. There have been relentless attacks on oil fields, especially today, after Israel struck Iran's gas fields. And look at Brent crude. It climbed past $118 a barrel in today's trade. The price dipped slightly later in the day. For context, before the war, one barrel of Brent crude was at around $70. It was at $70 a barrel. Now it is touching $120. That's a jump of 50%. And that's because the conflict has paralyzed energy supplies. Critical trade routes like the Strait of Hormuz remain shut, and strikes on energy facilities across West Asia are intensifying. All this is making investors nervous about the economy. That is why they're selling in droves. So that's reason number one, oil prices. Reason number two are foreign investors. Foreign money is leaving India. These are the foreign portfolio investors, the large global funds that buy Indian stocks. They've stopped buying. They're selling instead. They've sold over 5 billion worth of stock. This is across the first half of March. And which sector has been hit the hardest? It's the financial stocks, banks, insurance companies, financial services. They account for 60% of all foreign selling. And this is quite significant because financial stocks are the most sought after when it comes to foreign investors. They like owning stock in this sector, but clearly now there's a shift in the mood. The third reason is what happened in Washington yesterday at the US Federal Reserve. The Fed is the Central Bank of America. Yesterday, it decided to keep interest rates steady.
Today, the FOMC decided to leave our policy rate unchanged. The thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know.
Jerome Powell is the chair of the Fed. He made two big statements today. First was about America's economic outlook. Powell said there is, quote unquote, unusually high uncertainty. Second, inflation. The Fed is worried about rising energy costs, so it fears that inflation could climb, which means American investors are more likely to stay invested in US government bonds. They can earn predictable returns by staying invested in bonds, and they can avoid the risk of emerging markets like India. So all the three forces are now hitting the Indian markets at once. Rising oil prices, a foreign investor exodus, and a Fed that is in no hurry to cut rates. But the damage is not limited to India. Across the world, economies and stock markets are feeling the impact of this war. Take Europe, for instance. ING is a leading Dutch bank. It has downgraded its growth forecast for the Eurozone. The Eurozone is made up of 20 European countries. These are countries that use the euro as their currency. 20 countries, they make up the Eurozone. They're now expected to grow at just 0.9% this year. This is a fall from an earlier forecast of 1.2%. And the reason is energy shocks and supply disruptions. Then you have the Gulf economies. They are suffering too. Of course they are. We told you about the Goldman Sachs assessment. Qatar and Kuwait could lose 14% of their GDP. The UAE could lose 5%. Saudi Arabia 3%. Even Egypt, which is not fighting this war, is paying for it. Soaring fuel costs have forced the Egyptian government to act. Malls, restaurants, and shops must now close by 9 p.m. 5 days a week. On weekends, they get 1 extra hour. And for India, the risks are only growing. A new assessment is worrying. It says this war could undo India's progress on trade deals. The gains from recent trade pacts could be offset entirely. And that's what makes this war so devastating. It is causing bloodshed far beyond the battlefield.
The world doesn't fit in boxes, so why should your news? From battlefields to negotiation tables, from internet outrage to real-world injustice. The conversations everyone is having and the ones they're avoiding. It's the same show, but this new year, First Post America gets a new look. I'm Kerry Johnston, and this is First Post America.